Hi guys, I'm Dan, this is Kai, we're the directors at Crescent Mortgages. Today we're bringing you another FAMQ, frequently asked mortgage question, and today we are talking to day rate contractors. So if you don't work in a kind of a permanent position, if you are on a fixed term contract of some sort and you do charge a day rate, then this video is going to help you work out the best ways to achieve a mortgage. There can be challenges, but it is more than achievable. Before we jump into it, just to remind you that we are, what are we? I do forget this.
We are CMAP qualified mortgage
and protection experts with over 20 years combined experience in the industry. So let's jump into it. So the first thing to highlight is that most of you will either be running your income through a limited company, or due to the IR35 tax legislation in the last couple of years, you may now be running your income through an umbrella company. For a lot of other types of clients, it would be more tricky to achieve a mortgage, and potentially with the limited company, the lender will be looking at the details of the limited company, and you'd need to have a track record of running your income through that limited company, and the same with an umbrella company. But if you are a day rate contractor, and probably the two main areas most lenders will need you to meet to qualify are generally you need to be contracting for at least 12 months.
12 month history contracting, not on that contract, just contracting in general often, but
without a big gap. If there's a small gap in between contracts, that's okay. If you had a month, several months off, that may cause a problem. But 12 months continuous contracting, and what was the other?
Generally need to meet some sort of minimum level. So what, 250 plus 300, that sort of bracket per day will mean most lenders class you as a day rate contractor rather than your limited company or umbrella company, as Dan mentioned.
So if you meet those two, contracting for at least 12 months, and if your day rate is over kind of the 250 to 300 mark, we're being a bit grey with that because every lender has a slightly different minimum. But if you're kind of above £300 a day, you should be absolutely fine. Then on the whole, if you meet those two criteria, you're probably going to be able to get a mortgage based on your day rate. How is it assessed then in terms of the day rate?
So the lenders will assess it using your contract and your day rate. So they'll look at either the contract or possibly pay slips to show that. Yeah, if you get them through the umbrella company, or possibly even if you run your own company. But they'll take a calculation where they'll multiply it by either 46 or maybe 48. Some lenders will even multiply it by 52. So your day rate times the number of weeks in the year, some given allowance for
just
holiday.
To jump in there, you missed one important bit. The day rate times 5 times the number of weeks.
I always put the 5 at the end. Day rate times 46 times 5.
You don't do it chronologically?
No, I'm all over the shop.
Well, you're just going to confuse people.
Yeah. Either way, let's use an example.
Right. Okay, that's a good point actually. Yeah. So let's say your day rate is £500. Then now. Again, some lenders will have different ways of looking at it, but quite a common way that they assess it is they'll look at your day rate of £500 times 5, which is
2,500
times 46. 115. 115. So they'll look at your annual salary as 115,000, and then they'll look at their normal standard income multiples, which might be, let's say, 4.5 times income. So if they looked at your annual income of 115,000 and they were willing to lend you 4.5 times your salary, that gives us a maximum mortgage of
517,500.
Yes, £517,500. So that's kind of a ballpark of what you might be able to borrow. Now, of course, if you have lots of outgoings, lots of debts, then obviously that could impact how much you can borrow. If you're taking a mortgage with a partner who has an income, obviously potentially you could then borrow more. And we've given an example of 4.5 times income, but there are some lenders that are potentially willing to go higher than that. So you could potentially borrow 5 times your income, but that will come down to your circumstances, the size of the deposit you're putting down and that kind of thing. But hopefully that gives you kind of a good idea of how it's going to be assessed. Anything else you wanted to cover?
I think probably just the point that it's easier than you think, isn't it?
Yeah.
For some day rate contractors who maybe have had a few issues or have read a few horror things online or whatever it may be, it can be a bit more simple than needed if you have the right pieces of criteria.
Yeah, and to be fair, if you get the right help, if you just go shopping around online, obviously it's not going to be particularly easy, because although there are some lenders that are absolutely fine with your situation, there are many that aren't. So, I mean, us as a broker, if you contacted us, we work with specialist lenders and high street lenders who do have a more favourable view on day rate contractors. So we'd obviously focus on those particular lenders to make sure that we can get you a mortgage and get you the best possible rate. I think that pretty much covers everything. I mean, as we've highlighted, all of your circumstances will be slightly different. So, you know, what we've given there is a good indication, but if you do want to confirm the specifics, give us a call or drop us a message, or leave something in the comments and we'll get in contact with you. We can just take some basic details and, you know, around your current circumstances and then confirm what's going to be achievable. Any questions, let us know. See you soon.